Welcome back to our viewers to another exciting episode with my co-host Sihle Tuta, Commercial Director of EXNESS South Africa, and myself, Terence Hove, Senior Financial Market Strategist at EXNESS. We hope you've been enjoying the episodes that we've shot, the topics that we've discussed. And today we have a very, very interesting topic. Maybe you've stumbled upon this podcast and you're now interested to trade. You've registered possibly with EXNESS and you're wondering, what next do I do? And today we're going to be talking about what it means to be a beginner in trading and what it takes to be a good beginner and graduate from those levels. Sihle, how are you doing, mate?
Hello, Terence. How are you doing?
I'm very, very well, thanks. Good to be back shooting and, discussing a lot of the exciting topics that we always talk about.
Yeah, man. After a couple of weeks, it's back. It's good to be back in studio.
Yeah.
Chatting about a rather interesting topic.
Yeah.
Trading for beginners.
Yes.
I don't even know where to start with this one. Because when you go on the internet, right, there's people from different sides trying to sell a course, selling signals, selling something to the wannabe trader. And the amount of information that is available online on YouTube can be very overwhelming for somebody who's trying to start out in the business of trading. I mean, often all the marketers and all the, snake oil salesmen will, provide a picture that trading is a get-rich-quick scheme.
Yeah.
That it's easy money, that you can just make a lot of money overnight as long as you take a course and you subscribe to some channel. And only to realize that is further from the truth.
Yeah.
So, my thing is, the first thing that you need to do as a beginner trader or as a newbie or somebody who's starting out in this industry is to do your research.
Yeah.
Right. Educate yourself. You need to arm yourself with the right knowledge about the markets, about CFDs, about Forex, and all the other instruments.
Leverage,
margin, the risk that's involved.
Yeah.
Gather all the necessary information before you part ways or before you invest your hard-earned money. And also think on one topic that we've discussed previously is choosing the right broker.
Yeah.
Because that's another important thing. Or important component in your trading arsenal.
Yeah.
So you need to educate yourself. You need to know what you're doing. Take your time. Don't be in a hurry. Don't be under pressure to make a lot of money too quickly. And do not come into the scene with pressure to pay rent at the end of the month.
Yeah.
Because that's a recipe for disaster. Trading is a business. Like any other business. And I've said this before, it needs to be approached accordingly.
Yeah, so there's a lot of information out there, as you've mentioned, Sihle, and I hope our viewers and listeners are going to go back to those points and actually make a note of each and one of them, because that's the fundamental of setting up your trading environment, if we should call it that, to understand the variables that I play with your trading environment, your setup, you call it your screens, how you want them to look. You understand these terms, leverage, risk, and, margin, and your levels and things like that. So the basics, as you've outlined them, and we take that off as being done. Now the trader is in the system. At EXNESS, we offer you that opportunity to use a demo account, when you are in there. And then there's what they call technical analysis, fundamental analysis, sentiment analysis, strategy, and you've been around, the game for quite a long time now. And what would you say have been the key things you've seen consistent through the traders you have known in your career when it comes to now trading with all of those variables, finding your space as a scalper or trend trader, and all the other stuff in between?
Okay. So before we move on to that, so let's maybe wrap up the first bit,
Okay.
which is the tools that you need as a trader, right? So the one thing that sets trading apart from other businesses is that you don't need a lot of things. You don't need to have an office. You don't need equipment. You don't need a lot of money. You don't need to hire any staff. You don't need to pay electricity and water. You don't need all of these things. You don't need a fax machine. You don't need a photocopy, all of these things.
Yeah.
You need, obviously, the education or the mentorship from the right mentor, right? You don't always have to pay thousands of rands or dollars for a course. If you are able to self-educate, you can, source the information on the internet. YouTube is a valuable source. If you are able to have the time and the tenacity to self-educate, there's a lot of content on YouTube that you can consume. You can read books. You can take courses online without having to spend a lot of money. Secondly is obviously the tools that you need, which is ideally a laptop or a desktop. I usually discourage people who like to trade on the phone, especially if you're starting out.
All right.
Trading on phone, yes, it's possible. But if you're a beginner, I think just have a desktop and a laptop.
Yeah.
And obviously with an internet connection and obviously the capital, because you need money to place your positions in the market. You can't trade on demo for long. So coming to your question, I think the most important thing.
So all this becomes like the next step that connects this point that I was making, that this is a very important stage.
Yes, your education, your tools, which is, obviously your laptop, internet connection, and a funded account, which is your capital. Now, the education part, we can even broaden it, to say, does it include mentorship? Does it include a subscription to something like TradingView? And access to, data as and when it comes, when it comes to news releases. But maybe that's a topic for another, sort of episode altogether.
Yeah.
So once you've gone through this first step of trying to equip yourself with the knowledge and the right tools, now the second stage, which is usually the most challenging, which is to try and acquire consistency, right? Because you want to be consistent in your approach to taking trades, especially on the risk side, right? So the one thing that sets apart successful traders from those who are not successful in the long term is the approach to risk management. A lot of people think that trading is about accumulating profits and making as much money as possible, as quickly as possible. That is, again, another recipe for disaster. But rather, this should be approached with a risk management mindset. So if you manage your risk and you're consistent, you will last in this game longer. Secondly, you need to understand what type of trader you are, right? There are different styles.
Okay.
There's scalping, there's position trading, there's intraday trading. There's different styles of trading, which speaks to how long you stay in a position.
Right.
Some traders will go in and out of a trade in seconds and minutes. Some within an hour or two. Some will hold a position for days. Some will hold for a couple of weeks. So you need to know what your tolerance is for waiting for a trade to either take you out with a loss or take you out with a profit. This is assuming that you went into the trade and you put your stop loss in, which is a risk management mechanism. So you need to know what type of trader you are so that you stick to what you're good at and you don't try and dabble in everything. Because one of the big mistakes that new traders make, they want to try everything. They hear a guru on YouTube saying, no, you must trade on the 1 minute time frame and take 5 trades a day. They want to try that. Another guru comes who's said to be, develop this strategy. They want to try that. And then another guy comes who says, no, I trade the news. You shouldn't trade you should trade without a stop loss. They want to try that. That's another recipe for disaster. So you need to know what you trade, right? You need to know what type of trader you are. And once you've established all of that, it needs then to be built into your trading strategy, right? So you need to have a trading strategy. Now, a trading strategy is basically a set of rules that you follow before you take a trade. It speaks to what instruments you trade, Are you a Forex trader? Are you a stock trader? Do you trade indices? Do you trade, all the other, sort of instruments? You need to know what works for you, right? Some people trade everything because they're good with technical analysis, and they believe that a chart is a chart irrespective of the instrument. But in your case as a beginner, if you're trading Forex as an example, you may want to stick with the 5 major pairs, right? Because of the volatility, right? And once you've established that, then you need to know, are you trading this long-term or intraday, right? And then what your risk tolerance is. Now, the going thing around is you should never risk more than 1% of your capital in one single trade or in a basket of trades, so that if anything goes wrong, you can predetermine your loss. You know that at worst, you're losing 1% of your capital. So the one thing you want to know is that when you're sleeping or when you're busy with whatever you're busy with and you have trades running, that if anything goes wrong and if your trades go against you, at least you know you're not losing more than 1% of your capital, which is what you predetermined.
Right.
So I would say that would be the second step, right, in your journey as a trader. And obviously, once you've established all of the bits and pieces that go into your trading strategy, which is the instruments you're trading, your style of trading and how much money you're risking, now you want to obviously focus on how you enter and exit trades. What signs are you going to look for on the chart for you to jump into a trade and for you to exit? And once you've established all of that, you want to ensure that you are now consistent. And consistency means you basically follow all the rules that you built into your strategy to the T every single time. That's what successful trading is all about. No strategy is going to be 100% successful. In fact, some strategies even win 40% of the time. So they win 4 out of 10 trades and the traders still make money. This now obviously speaks to the risk and the reward. So the whole idea is what you're targeting or the reward should be bigger than what you're risking. If you're trading an account with 100,000 and you're risking 1%, which is 1,000, you must target more than the 1,000 ideally, so that it gives you leverage to lose a bit more trades than you're winning. Because if you're risking 1,000 and targeting 1,000, you have to win more than 50% of your trades. As opposed to if you are risking 1,000, which is 1%, and you are targeting 3% as an example, because there are setups that can give you 3% return in one single trade, but those are obviously not very common. You may have to hold a trade longer. So if you've got a 1:3 risk to reward ratio, you only have to win just a little bit above 30% of your trades. So you can afford to lose 6 out of 10 trades if you have a healthy risk to reward ratio. Right? The lower your risk to reward ratio. So if you have a 1:1, then you have to win more trades than you lose.
That's a very interesting topic because I recall a lot of the times, especially in my earlier years with EXNESS, I'd always constantly get that question, with beginner traders, and some intermediate traders on risk to reward. And some were so fixated on that 70-30 percentage that they forgot the pure logic of it, which is you can win 70% of the time, but how you win is more important than just winning. You can lose 30% of the time, but how much you lose in that 30% is very crucial, meaning you can win 30% of the time, make 1,000, that's 3,000. Because you've got good risk management skills, the 70% that you actually lose, in this case, perhaps you lose 100, so that'll give you, maybe you lose 10, call it you lose 700 worth. And then from the 3,000 you've made, take away 700, 2,300 at the end of the week that you have, which that's using the scale in your favor. which is to that point, what your risk ratio is dependent, more importantly, on winning and how much you win.
Yeah.
Yeah.
So, and we have to emphasize this, that we are not giving advice here, right?
Yeah.
Trading has unpredictable outcomes.
Right.
Anything is possible.
Right.
But we can't deny the fact that there are probabilities that are higher than others.
Right.
Right. If you manage your risk prudently and you follow your trading strategy, you could, right, end up on the green side, which means you could be profitable. Yes, there's, people lose money in this industry, but others make money. There are no guarantees, but you stand a greater chance of success if you follow or stick to the points that we've just spoken about. Consistency in the long term requires for you to follow your trading strategy.
Right.
And at the center of any trading strategy or any successful trading strategy is risk management.
Yeah.
Third point. So once you've gotten to this stage, right, you want to stay away. So this is my opinion, right?
Yeah.
You want to minimize getting involved in a lot of chat groups and online forums and that group and that group, because
the signal group. Yeah.
Look, there's a lot of information available.
Yeah.
There are a lot of gurus.
Yeah.
Everybody has an opinion.
Definitely.
Everybody wants to tell you how you should.
Yeah.
How you should trade.
Yeah.
To the point where it can get overwhelming and confusing.
Yeah.
When you're starting out. You need to find an education provider.
Yeah.
Who's reputable.
Yeah. Yeah.
And stick with that person. And there's an argument that, all strategies work as long as they are followed correctly.
Yes. And
the risk is managed to the T. In fact, there's a very popular author who wrote a book called Trading in the Zone, Mark Douglas. So he makes a very
That was quite popular when it came out.
Yes, it was.
Yeah.
So he makes a very interesting argument. So he says, if you are a technical analyst and you are well respected, right, and you take a position, let's say you take 5 to 10 trades, right, and based on your analysis, based on your knowledge, and based on your skill and your experience, right, he says he can come and take the opposite of all of your trades. Yeah. So wherever you buy, he will sell. Yeah. Wherever you sell, he buys. Yeah. But he will manage his risk prudently. He argues that he can still make money.
Wow. That's powerful. Risk management is the secret ingredient.
Because remember, even some of the well-respected people on technical analysis, sometimes they can be 50% right or even less. Yeah. Some of the best traders in the world are only right 4 or 5 times out of 10.
Wow. Wow.
Because you cannot predict the market with absolute certainty.
Yeah. You can't.
You can't.
But if you've got the right risk parameters.
Yes. You need to know how much you're losing when you're wrong. It's something you need to know beforehand.
Right.
So that there are no surprises.
Yes. And when you're wrong, it's a signal to say you got something wrong.
Yes.
Yes.
It's a learning curve. Yeah. You move on to the next one.
Yes.
Your trading statement is going to be a mixed bag of winners and losers.
Yeah.
Now you can look at this.
It's not a one-way.
No.
line.
So you can look at this in one of two ways. Your winners must be more than your losers. So which means if you took 100 trades in the month, you need to have more winners than losers for you to be profitable. Or if you have fewer winners and more losses, but each win must be bigger than each loss. Yeah. Which is basically the risk to reward
ratio.
It sounds simple, but in practice, it's nerve-wracking.
It's nerve-wracking.
It's nerve-wracking.
Sure. That's why we do it, and that's why we love it. And what does all of this then mean when you begin your journey with a multi-asset broker like EXNESS? What are the benefits that you have, starting right? So you've got all of these, 3 steps right, and then you choose EXNESS. Why is it better with EXNESS?
One is the trading conditions, okay? because at EXNESS, as you know, EXNESS is one of the most cost-effective or cost-efficient brokers to trade with.
Right.
As an example, we've recently cut our spread on gold by a further 20%.
Wow, that's
arguably making our spread on gold the cheapest in the industry.
Yeah.
Our trading conditions are very favorable, especially for beginners. Our customer support is unmatched. Our customer support is 24/7.
Yeah.
If you jump into a live chat, there's always going to be somebody who's going to assist you on the other side of the line in multiple languages.
They don't tell you business hours are from.
No. In multiple languages, even depending on where you are in the world. If you are anywhere in South Africa, in Kenya, in Uganda, in Mozambique, there's likely somebody on the ground who you can meet to chat to regarding any issues that you want to discuss regarding your trading or regarding the broker. You also want to have the peace that you're trading with a broker that is regulated. EXNESS is a multi-regulated broker in multiple jurisdictions around the world, including the FSCA. We are an ODP holder here in South Africa, meaning that we are licensed to take client deposits and we are licensed to hold their funds. We are a serious concern. I mean, we've got multiple offices, all over the world. The instruments we offer cater to all different types of traders. I can go on. And the broker you choose to trade with is also a very important component in your trading business. Because, and note, I keep on saying that your trading business because it is a business.
It is a business.
So the stakeholders that you choose to partner with, including your broker, including who you choose to educate you, very, very important.
Yeah. That's remarkable, Sil.
Yeah.
That's remarkable. Well, to our viewers and listeners, we hope that this episode has enlightened you on your trading journey. Maybe you are well advanced in your trading journey, and it just helps you to remember and refresh your memory on some of the key things that have made you successful. We hope you've enjoyed this episode. Tune in to the next one. Remember to like and subscribe across all our socials, so you'll be tuned up when the next episode comes. From Sihle and myself, it's bye for now.
Cheers for now. Bye-bye.